Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. The stock market has been on fire this entire past month. It has been breaking historic records both to the downside and to the upside. Just yesterday we closed the week with a over 9% gain on the S&P 500, and that's mainly what I'm going to be talking about. What are the consequences of this? There are many technicals that have been developing in just the past couple of days, so I'm going to cover that in this video. If you are new to the channel, make sure to subscribe. I try and post updates on the S&P 500 and on the markets as much as possible, and we have had a very successful month so far on the S&P 500. We've been able to actually trade almost the entire initial move down, so 15% profit there, and we traded almost the entire dead cat bounce. You can watch my dead cat bounce video all the way to the resistance level that I had outlined, and we also traded from the break of support here at the all-time highs. We gapped down and we traded from here all the way to the 2,500 point level. You can watch my video called "The S&P 500 is poised for a move down to the 2,500 support level," and I discussed this trade setup. So the markets have bounced yesterday, and that was something that was not unexpected. I did outline this divergence that was building on the daily chart. You can see right here. We have the RSI making a higher low while the price is plunging down. So we knew a reversal was coming at one point or another, and that's when it came. And we actually reversed off of this significant support. You can see right here. It is a significant support level. We have reactions here in January and March from 2018, and you can see we actually headed right back to this trend line here. And this trend line is something I talked about the other day in my video on the weekly chart. This is a 11-year bull market trend line that's been holding the market up for 11 years. So we did break that and we came right back up to it and parked right on it. And I am going to show you this on the weekly chart, but before I do so, I just want to say that this is called a backtest, and I often see these in my trade setups. You can see right here we had a backtest. I think one of my videos back here, you can watch it. So from the 11th of February, one of my videos was called backtest of the trend line, and look what happened. We reversed off of that trend line and actually plunged to all my targets below. So what is happening here is very significant. We will see if this is a successful backtest, meaning it will reverse and plunge down, or if this is a bear trap and we will reverse and get back above this trend line. So let's take a look at the weekly chart and see what's going on here. So this is the weekly chart of the S&P 500, and you can see this is the entire bull market since 2009. And you can see this trend line, as I said in my last video, has been holding up the market the entire time. We did have a couple of dips below it. We had one in 2018, a brief dip. We had a brief dip in 2015, and here again a tail of a candlestick dipping below. And currently that is what we have. We only have the tail of this candlestick dipping below the trend line. So this is not inherently a sell signal for now. We need a solid break, a solid weekly break below this trend line for it to be a sell signal. Now you can see in 2016 we did have a full break of the trend line, and this is what you call a bear trap. And this can be powerful for the bullish case. When we get back above the trend line, it can lead to some pretty powerful rallies, which is exactly what we saw here, a very powerful rally and a continuation of the bull market. So this is definitely possible. I don't think it is probable, but it is possible. Now I'm going to outline the possible scenarios that we may face in the coming weeks. I have three scenarios that I thought about, and I narrowed it down to two of them that are more likely. But before I do so, make sure to like and subscribe if you haven't already. It does help me out tremendously. And now let's get right into it. The first scenario is that we have a consolidation next week uh, like this around the trend line, and that we have then upside to resume the bull market. This is definitely an option. This is what happened in 2015, 2016, a consolidation around the trend line and then a resumption of the bull market. I don't think this is likely. I think the current situation with the coronavirus is definitely making this a lot less probable. But again, we do need to consider every possible outcome and not be taken by surprise in the markets. Now, the second scenario is that we have a consolidation and then we have downside, we break the trend line, and that would mean the bull market is over and we begin the bear market. And as you know, I do favor a 1 to 2 year bear market going all the way down to these support levels at the very least. This 2100 level, this is definitely my bear market target at the very least. And one thing to definitely consider with this scenario, I'm going to clear the chart right here. And one thing to consider is that this can come in the form of a bull trap. This consolidation can definitely spark a rally and then only break the trend line right here. So this would be the classic bull trap scenario. If you watched my most successful video on my channel, I think I made it around here. I talked about how the markets would likely continue this agreed phase all the way to the 3,400, 3,500 point level before coming down, testing this trend line again, and then having a bull trap phase and then only breaking the trend line. This is the classic kind of end to a bull market. That's what you want to see. But again, with the current situation, things can go a lot faster. We are seeing a lot of panic in the markets. So having such a strong rally off of the trend line is again not very probable. I don't think the markets can sustain much upside for a long period of time right now. Now, my third scenario would be a successful backtest of this trend line on the daily chart. So for that, we are going to go back to the daily chart. I'm going to show you exactly what I'm talking about. So you can see that this bounce that we had was very powerful, but unfortunately for the bulls, we did run into some pretty solid resistance. You can see this level here that I've had for a long time is very significant. We have reactions here, so it will act as a line of resistance for the bulls. So this is definitely something that is going to be difficult to break for the bulls. And same thing for this trend line. We are technically coming at this trend line. We are coming back to the trend line from below. So when you come to a level or a trend line from below, it will act as resistance. So these are two coinciding levels that will act as resistance for the S&P 500 for the price. And so in terms of pure technical analysis, this is actually the most likely outcome. This is the most probable outcome for the coming days, for the coming week. I do favor a reversal off of this level. and a comeback down to this 2500 level, and then the next level right here, and then we'll start seeing a more controlled move down in the next bear market. Now, I do want to be clear, I did not take another position, another short position from here. I do have shorts lasting from all the way up top, long-term shorts, but I am not getting any extra exposure considering we are parked right on this 11-year trend line, and a lot of different scenarios can happen. That being said, I do have a trade setup that I am looking for if we start seeing more downside. I have this red line of support here that if we start breaking, I will be adding to my short position for a move down to my next target, which is right here, this 2,350 point level. Now, if we do have a green day on Monday and that we pop the trend line, we pop the resistance level here, I won't be adding to my long-term S&P 500 position just because I'm not convinced we will see a strong rally in the coming days. I do favor some kind of consolidation if we pop this level. We will probably dance around this trend line before breaking it for good. But again, that is if we have a green day. So there are a lot of ifs in this analysis, and that's because I think really no one knows exactly what's going to happen next week. Are we going to continue the panic that we started, or are we going to start having a more controlled move down, or some people are even looking for upside? So I told you exactly what I think is the most likely to happen, but again, anything can happen in the markets, and I'm waiting for my sell signals to enter into my short position all the way down here, and then we'll see how we can add to our positions. Now, that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to like and subscribe if you haven't already. In the meantime, good luck on your trading, and see you next time.